Here's exactly how I made $30,000 in XRP this morning, and how you could have caught the same play as well and made a ton of money. All of this was documented and posted this morning on my Instagram. First called this play on Ethereum pretty much at 1845, betting on it going up. This was based off the level strategy. I see these lines, I long or short, and I closed $25,000 in profit. Now, you saw we were trading Ethereum. This is what I've been doing for the past year ever since crypto's been going down, because I can make money when all these coins crash. Majority of the time, I'm just adding to my XRP bags. And a ton of you did the exact same thing as me. This is what I tell you over and over again. This coin has so many moves that just go up and down. You can make money on all these little pumps and dumps. So many people think I just say sell all your XRP. You don't gotta sell anything. Just learn how to read a chart and figure out how.
With a near-perfect 99.8% ETF approval rate, BlackRock turning its sights on XRP could send each token screaming toward a $25,000 price tag overnight. Imagine the day when one announcement flips the crypto world on its head. You're checking your portfolio, and suddenly XRP rockets past every record you thought possible. How can a single filing unlock a tidal wave of demand so powerful it could lift XRP to astronomical heights? What hidden forces are aligning behind the scenes to make this quiet digital token the next giant money-making opportunity? Today, we're peeling back the curtain on the one XRP announcement that could trigger a $25,000 surge, and why it's closer than you think.
I believe the XRP price could easily hit double and maybe even triple digits by the end of the cycle. Hear me out. Here we're looking at XRP's market dominance. Back in 2017, the XRP market dominance peaked at around 30%, which means that XRP was as big as nearly 1/3 of the entire cryptocurrency market. Now, what you can see right now is that the market dominance is breaking its multi-year downtrend since 2017. So if history repeats, the XRP price is gonna go up.
Breaking XRP news, putting us one step closer to massive adoption, not only in the crypto space, but the XRP ecosystem. Grayscale announces an XRP trust, getting us one step closer to an XRP ETF. I've tried to warn people since 2020. The big three, just like the auto boom, just like the .com boom, is going to be Bitcoin, Ethereum, and XRP. And all the rest are going to be working to survive regulation.
The tale begins with two of the financial world's heavyweights, BlackRock and Grayscale. BlackRock, the asset management colossus boasting over $10 trillion under management, has a near uncanny knack for ETF greenlights. Nearly every ETF they've proposed has sailed through regulatory scrutiny, 99.8% success to be exact. When they launched their Bitcoin ETF, BTC jumped 40% in just 24 hours. Now, they're zeroing in on XRP. Picture this: the same architects behind Bitcoin's institutional embrace, applying their blueprint to the oft-mistrusted Ripple token. But they aren't acting alone. Grayscale, another titan in digital asset funds, has quietly woven XRP into its broader cryptocurrency holdings. They filed for their own XRP ETF, signaling growing confidence in Ripple Labs' network. Together, these moves aren't just financial blips, they're seismic shifts in how Wall Street views digital currency.
Other things to take a look at: Ripple joins BlackRock and JP Morgan as a member of the Trade Association ISDA. And you'll notice something right here: international swaps and derivatives. So they're in the association. Let me zoom in on that. They're in the very association that is talking about derivatives. We're going into a very interesting time in 2025 where you've got all of this coming to a head at once, where you've got Ripple investing in derivative exchanges, obviously the moves by Robinhood and RLUSD all coming together at the same time. Very interesting times ahead here, I think, for sure.
Whoa, crypto fam. Grayscale just dropped a bombshell with the first ever XRP trust. This is huge. Ripley and XRP are about to go mainstream, and here's why you should care. Picture this: institutional investors pouring in, boosting XRP's credibility and potentially its value. But wait, there's more. This trust could be the stepping stone to an XRP ETF. Imagine the flood of new investors when that happens. We're talking serious adoption, folks. This move signals growing confidence in XRP's future, despite its rocky legal past. So are we witnessing the start of XRP's rising to the top? Only time will tell. But one thing's for sure, the crypto game just got a whole lot more interesting. Stay tuned, because this could be the beginning of something big.
Let's break down why this matters. ETFs open the gates for institutional and retail investors who crave simplicity and regulation. No digital wallets, no private keys, no exchange hacks, just ticker symbols on your brokerage. When BlackRock filed for its Bitcoin ETF, it effectively bridged the chasm between traditional finance and crypto. An XRP ETF from the same stable? That one announcement alone would turbocharge demand. Suddenly, pension funds, endowments, and everyday investors could pile into XRP with the flip of an order. Reports even suggest that BlackRock and JP Morgan have quietly amassed over 7.5% of their combined wealth in XRP. A leaked document hinted BlackRock might shift its entire focus from Bitcoin to XRP, turning heads across the industry. Institutional interest is the lifeblood of explosive rallies. When these giants lean in, retail investors follow suit, and the resulting frenzy is what catapults prices into the stratosphere.
So a lot of people are asking why BlackRock hasn't filed for their XRP ETF yet. Well, I've been tracking the moves that BlackRock has been making for a very long time, and they're super calculated, they're strategic, and they never make random plays. But here's the thing, I think BlackRock is waiting for the perfect moment. Probably post-Ripple case, dust settling completely, end of 2025 feels right when BlackRock could enter the fray and gain a ton of interest with that XRP ETF. That's at least my take. What's your take? Let me know down below. Follow for more.
Okay, so we're edging towards the climax here because, right, here's the scenario that made my draw drop. If, and it's a big if, BlackRock's XRP ETF replicates the Bitcoin ETF ratio, well, we're staring at a potential inflows north of $40 billion. Now, XRP's current market cap hovers at around $30 to $35 billion. Do the math. Doubling or even tripling liquidity could push price dynamics into uncharted territory. Supply isn't elastic, right? There's only so much on exchanges. Spiraling demand meets fixed availability, and that's historically a recipe for liftoff.
Now, here's the wild card: the XRP ETP. Unlike an ETF, an ETP trades on an exchange but doesn't carry the same regulatory baggage. Rumors say Vidil, a financial powerhouse, has already launched an XRP ETP, albeit still at zero valuation and awaiting its public debut. But the moment it's listed, the path to an ETF is practically paved. Imagine the coordinated rollout. The ETP launches quietly, value zero. Then weeks later, the SEC waves through a BlackRock-backed ETF. That's the one XRP announcement that changes everything. To put it in perspective, Bitcoin barreled to $43,000 even before its ETF was official. XRP, with its lightning-fast ledger and partnerships with global banks, has far greater utility. Ripple's network already connects over 1,700 financial institutions. It's designed for high-volume cross-border settlements. When you factor in the trillions that pass through SWIFT daily, over $7 trillion just for international trade, the potential runway for XRP is mind-boggling. If XRP captures even a fraction of that volume, we're talking about a price explosion well beyond conventional targets.
Breaking crypto news. Bitwise just dropped a bombshell with their S1 filing for a new XRP ETP. What does this mean for the crypto world? Well, it's like opening a door to a whole new financial universe. Imagine being able to invest in XRP as easily as you buy stocks. That's what this ETP could do. But here's the kicker. Bitwise's CEO is calling it more than just an investment. He's talking about blockchains revolutionizing money and apps as we know them. Think about it. Decentralized finance, smart contracts, and digital assets all becoming mainstream. This isn't just about making a quick buck, it's about reshaping our entire financial system for the 21st century. Are you ready for this crypto revolution? Because it looks like it's coming, whether we're ready.
All right, folks, we got another XRP ETP going live tomorrow. Retail still sleeping on XRP, but the institutions aren't. Let's take a look. So tomorrow we have Virtune, which is going to be launching their Virtune XRP ETP on the NASDAQ exchange in Stockholm. This ETP enables investors in the Nordics to access XRP through a 100% physically backed exchange traded product that can be held in an ISK, capital insurance, and or a custody account. So the ETPs are going live in Europe. It's only a matter of time before an ETF goes live here in the United States. Is it going to be BlackRock, some other institution? Only time will tell. But once again, Retail might be pissed off, might be frustrated with XRP's performance, but the institutions are still showing up. The ETPs are going live. You guys let me know in the comments.
Analysts are setting ambitious forecasts. $1,650 to $2,900 by year-end 2025 if the ETF materializes. But with the leaked ETP already on deck and BlackRock's track record, some visionaries believe $9,831 becomes the new baseline. Stretch your imagination further. If XRP handles a modest $3 trillion daily through its ledger, the value equation shifts dramatically. Supply is capped at 100 billion tokens, demand spirals upward, and valuations naturally follow. In that scenario, $150 per XRP isn't a dream, it's the floor. Now scale it toward the outer limits of institutional frenzy, and you arrive at figures you might once have dismissed as fantasy: $25,000 per token. Skeptics will say, this is all hopium, wishful thinking fueled by leaks and rumors. But let's remember history. When Bitcoin's ETF plans first surfaced, whispers alone sent markets reeling upward. The formal filings merely confirmed what sentiment had already priced in. In the case of XRP, every piece of evidence, from Grayscale's filing to the mysterious Vittle ETP, builds toward that inevitable green light.
One thing we have known from the start is Ripple's goal was to use the XRP ledger to really transform the current financial system. And Ripple's goal for that wasn't to disrupt the current financial system. It wasn't to tear it down. It wasn't to subvert governments. It was to work with the traditional financial system and say, how do we take the value currently in the system and upgrade the rails? Right now, the current rails of our traditional financial system are analog. They're outdated. And what we know is the internet has disrupted every industry. What Ripple is doing is positioning the financial system to essentially be disrupted by blockchain technology, but not by tearing down the traditional institutions, but rather working with them and helping them update their rails so that they can be competitive in this next generation of finance.
BlackRock's own analysts have quietly confirmed internal documents referencing an XRP iShares Trust, the precursor to an ETF filing. It's listed on the Delaware Corporation's registry right now, waiting for its moment in the SEC's approval queue. When that moment comes, the market reaction will be seismic. Traders will scramble to secure positions, algorithms will trigger momentum buys, and the surge will feed on itself until institutional order books are empty. But let's not lose sight of the human element. Behind each headline and leaked PDF are teams of analysts, lawyers, and engineers who have spent years refining the XRP ledger. They've built a network resilient enough to handle quadrillions in global debt transactions, deals made through the International Swaps and Derivatives Association, BRICS clearinghouses, and even nascent central bank digital currencies like Palau's CBDC on XRP. This isn't vaporware. It's a proven infrastructure awaiting its debut.
ProShares. Does the name ring a bell? ProShares? Huh? Does it? ProShares launched the first Bitcoin futures ETF in 2021, mind you. They're applying that strategy to XRP. In January 2025, ProShares filed not just one, but several XRP ETF products. These include a ProShares XRP strategy ETF, likely holding XRP futures. Even ideas like short XRP ETFs, a bet against XRP's future price. Right. ProShares used a form called N1A for some filings, which hints that these filings are futures based when we see that. They even had plans to launch as early as April 30th, 2025, according to some documents, but ProShares publicly denied the rumors. They're in the mix, focusing on XRP futures ETFs, possibly including leverage or inverse versions.
Can I store my XRP in my Trust wallet? Yes, you can. However, I do have a better app for you. It's going to be the Zum wallet. But if you really want to keep your XRP safe and you care about your holdings, get yourself a cold storage device like a Ledger Nano or a Trezor and store your XRP there. It's going to have the highest level of security and ensure that you won't get hacked or be a victim of any exchanges going bust.
And that brings us back to our central question. What is the one XRP announcement that could trigger a $25,000 surge? It isn't a price target or a chart pattern. It's the official SEC approval of a BlackRock-backed XRP ETF. That single nod from regulators will unlock pent-up demand from every corner of finance. Hedge funds, sovereign wealth funds, mutual funds, and millions of retail accounts will instantly recognize XRP as an investable, regulated asset. The announcement will arrive with little fanfare, a press release, an SEC ticker update, but its impact will reverberate through every exchange worldwide. In mere hours, trading volumes will triple, bid-ask spreads will tighten, and price discovery will accelerate into warp speed. By the end of the day, headlines will shout about the new all-time high. Overnight, crypto skeptics will scramble to explain how they missed the boat. What happens next? History suggests a cooling-off period, profit-taking, price consolidation, and a healthy retrace. But the narrative arc will already be set. XRP is no longer the underdog token. It's a mainstream financial instrument. Every subsequent regulatory filing, partnership announcement, or network upgrade will be viewed through that lens, sustaining momentum for months.
In November 2023, a filing surfaced suggesting BlackRock was launching an XRP ETF, but BlackRock swiftly denied it, labeling the filing as fake. The incident caused XRP's price to spike before dropping back. So what's the real story? BlackRock has found success with Bitcoin and Ethereum ETFs, managing over $30 and $1 billion respectively. However, regulatory uncertainties, especially the SEC's ongoing scrutiny of XRP, make an XRP ETF risky for now. Experts believe BlackRock is waiting for clearer regulations and observing competitors like Grayscale. So while an XRP ETF isn't on the horizon yet, it's a space.
Consider the aftershocks. More banks integrating Ripple's on-demand liquidity. More central banks testing XRP for CBDCs. More custodians offering wrapped XRP. Each development reinforces the foundation laid by that pivotal ETF approval. And each reinforcement chips away at the total supply available on open markets, tightening the scarcity dynamic. By the time retail investors fully grasp what's happened, the market cap chart will look more like a hockey stick than a jagged roller coaster. Early movers will have locked in life-changing gains. And for the rest of us, the story will serve as a cautionary tale about waiting too long for proof, because in markets driven by anticipation, the proof often arrives after the price has already doubled. So, when that one XRP announcement lands, you won't need to scour charts or decode filings. You'll feel it in your portfolio balance, in the buzz of trading platforms, and in the headlines that no longer question XRP's legitimacy, but celebrate its record-breaking ascent.
I think one of the things that will surprise us a year from now is that banks will be custodying digital assets directly. And I think right now we think about that and think, look, there's no way that's going to happen. They're too conservative. And I think what you're seeing is, two things happening. One is banks are seeing that a lot of money is being made by digital asset exchanges globally, and banks are profit motivated. The second, and as we've talked about up here, certainly Ross has made very clear, is regulatory clarity and regulatory frameworks enable banks and financial institutions to lean into these markets.
But there's another layer to this unfolding drama that often goes unnoticed: the sheer velocity at which information travels in today's markets. In an age where a single tweet can send stocks and cryptocurrencies into a frenzy, the announcement of an XRP ETF approval wouldn't just influence traditional order books. It would ricochet through social media, fueling an almost instantaneous feedback loop. Picture this. Within minutes of the SEC's confirmation, algorithms programmed to scan news feeds and filings spring into action. They execute buy orders, pushing prices higher. Those price movements trigger fear of missing out among retail traders, who pile in via mobile apps. Before you've even finished refreshing your screen, XRP is on a tear, its value climbing in parabolic fashion. And it isn't just the speed that matters, it's the psychological shift. Today's investors don't merely buy assets, they buy narratives. Once the narrative of XRP as the institutional-grade asset takes hold, it becomes self-fulfilling. Analysts publish price models, influencers tweet charts, and every bullish forecast gets retweeted 1,000 times. The market's collective consciousness begins to price in future utility. Cross-border settlements, central bank digital currencies, tokenized assets, even new financial primitives we haven't imagined yet. That narrative, once cemented by regulatory approval, can carry prices far beyond any single valuation metric.
With all these institutional partnerships,
are people going to look at things like XRP differently than the rest of the cryptocurrency market? And in my opinion, the answer to that is yes, absolutely. Institutional investors are going to look at XRP as something completely different than the rest of cryptocurrency. They are going to see things like an XRP ETF live. They're going to see things like a Ripple IPO. They're going to see things like Brad Garlinghouse sitting on the Cryptocurrency Council.
Consider the path carved out by Bitcoin. Before its ETF, skeptics scoffed. Afterward, every major financial publication ran headlines declaring crypto's arrival in the mainstream. Spot trading volumes exploded, derivative products proliferated, and institutional wallets began to accumulate. XRP stands at that very inflection point, but with a critical advantage: speed and scalability. Ripple's network can process transactions in seconds at a fraction of a cent. Banks don't need to wait an hour for final settlement. They can move money across continents almost instantly. When you frame XRP not as a speculative token, but as a global payments utility, you unlock a whole new realm of demand. Institutional investors aren't the only ones sharpening their pencils. Nation-states are conducting their own pilots. BRICS countries, wary of dollar dominance, have quietly tested XRP for cross-border settlements. Palau is building a CBDC on the XRP ledger. Saudi Arabia has explored using Ripple's technology to settle energy trades. As each of these projects matures, it reduces counterparty risk and demonstrates real-world throughput. One day, a central bank governor speaks at a conference and mentions XRP's ledger by name, another spark that sends prices from thousands to tens of thousands.
Spot ETFs track the price more directly, while future ETFs can have a slight deviation, because these future prices could basically be a bit higher or lower than current prices. A phenomenon we call contango or backwardization. The same ideas apply to crypto like XRP. The key difference for investors: for an investor or crypto beginner, a spot XRP ETF means I'm directly holding real XRP just via a fund. Whereas a futures XRP ETF means I'm holding a fund that profits from XRP price changes via contracts, but the fund doesn't hold XRP.
In the end, it's more than a price prediction. It's a story of tectonic shifts in how money moves across the planet. That single XRP ETF approval will function as both arrow and bowstring. The arrow that pierces the ceiling of expectation, and the bowstring built from years of technological innovation, regulatory groundwork, and institutional trust. When it fires, it could carry XRP to realms that today seem fantastical, $25,000 or beyond, by unlocking a deluge of demand and narrative momentum. The countdown to that defining moment has begun. The countdown has begun. That single SEC nod is closer than ever, and when it drops, it won't just reshape crypto history. It could redefine wealth creation for everyone tuned into the market. Are you ready to ride this wave when the announcement goes live? Subscribe, hit the bell, and join us next time as we track every ripple on the path to that $25,000 horizon.